Investor confidence in Florida's housing market is fading fast as the number of homes for sale continues to soar. This sudden surge in inventory is a clear indicator that the market is on the brink of a substantial decline in home prices. The situation is causing concern, especially in this neighborhood where the ripple effects will be strongly felt. Redfin, a real estate data company, has unveiled alarming figures pointing to a sharp decrease in investor purchases throughout Florida. These savvy investors, often the first to enter and the last to exit the market, have taken notice of the increased inventory and are now rushing to exit before the inevitable price drop. Could you envision the repercussions of a 20% increase in market inventory? That's precisely what has just occurred, signaling a significant cause for concern in Florida. The writing is unmistakably on the wall, and as market conditions deteriorate daily, it's crucial for you to take heed and start preparing for what's to come. Now might be the perfect time to consult with a real estate expert who can provide guidance on various strategies to safeguard your investment. Investor activity has witnessed a significant decline in recent years. If we take a closer look at the real estate market in Jacksonville, Tampa, and Orlando, we can see that investor activity in Florida has declined in recent years. The levels have dropped to 50%, the lowest they've been in the past 5, 6, or even 7 years. That's a substantial drop, right? This indicates a significant shift in investor interest in Florida's real estate market. Maybe they're looking at other states, or maybe it's the economy. Who knows? But the point is that this is not something we see daily. Now, this is not to say that the market is completely dead. Some investors are still keeping the market afloat, but most of them have pulled out. What does all this mean for the future of the market? Let's look closer at the reasons behind the Florida property market meltdown and how investors can brace themselves for what's yet to come. The Sunshine State, known for its thriving tourism industry, has long been a prime destination for real estate investors. With its cheap property prices and warm climate, many saw Florida as the perfect investment opportunity. While the pandemic caused many purchasers to flood into Florida, it also caused a decline in the state's tourism industry, a harsh reality that the real estate market couldn't ignore. As a result, the sudden drop in Florida's property market has stunned many investors. Over $7.7 billion in sales were recorded in September 2020, which kept decreasing after the pandemic. The housing market has hit a major roadblock spanning from the west coast of California all the way to the east coast of Florida, affecting all the regions along the way. Buyers seem to be throwing in the towel as the market is frozen. The situation appears dire with very little activity regarding home purchases or sales. Please take 2 seconds to help me out and hit the like button and subscribe if you're enjoying the video so far. Each like and subscribe helps support this channel and keeps us motivated to keep making you great content. Thank you. Now, back to what I was saying. Over the past 5 years, homeowners in Florida have been facing serious financial setbacks as the cost of homeowners insurance, property taxes, and homeowners association fees have been rising at an unprecedented rate. This rise in expenses has specifically impacted those who have lived in the state for an extended period or owned a second home in the region. Regrettably, due to the escalating costs, homeowners struggle to manage their finances and are often unable to make ends meet. Some are even forced to sell their properties as they can no longer afford them. The relentless expense increases have had severe consequences as many homeowners feel the financial crunch. Homeowners insurance is at an all-time high, and it has become challenging for people to protect their properties without incurring significant expenses. This has left homeowners with extremely limited options as they must choose between the protection of their homes or the viability of their finances. It is worth mentioning that this issue is not isolated to a small demographic. Instead, it affects homeowners across the board, from those who own modest homes to those with luxurious properties. The current situation remains a significant cause of concern for Floridian homeowners. They're finding themselves in a complex situation where the cost of living is increasing rapidly, and they have to make tough choices that impact their financial stability and the safety of their homes. Many homeowners are facing financial difficulties due to the rise in property taxes. They're now required to pay more to maintain their properties, which has burdened their finances. The increased taxes make it challenging for them to manage their daily expenses. Several factors have led to this increase, including changes in property values, inflation, and economic fluctuations. Recent news out of Florida indicates that the state's economy has started to experience a considerable decline, particularly in the Tampa area. According to a report published by the Tampa Bay Times, small businesses in the area are currently facing significant drops in revenue. In some cases, these businesses have decreased by a staggering 50% over the last year. Many small businesses are barely hanging on by a thread. While they remain open for business, the uncertainty of the situation is looming, and the possibility of closure is very real. Should they be forced to shut their doors, we can expect to see a surge in unemployment rates throughout Florida. This trend is not unusual for the state, as we have observed similar patterns in previous economic cycles. It's worth taking a closer look at the root of the issue. Why are small businesses in Tampa and St. Petersburg experiencing such a decline in revenue? The answer is multifaceted, but the pandemic has certainly played a significant role. Small businesses have felt the greatest impact, as many companies struggle to adapt to remote work, social distancing guidelines, and ever-changing rules and regulations. While larger companies have the resources and flexibility to weather the storm, small businesses often lack the same level of adaptability. In addition to the pandemic, other factors such as competition from larger corporations, changing consumer habits, and increasing expenses have contributed to the decline. The ramifications of these small businesses closing are significant, not only in terms of job loss, but also for the local economy. These small businesses are pillars of their communities, providing goods and services to the people who live nearby. Without them, residents may have to travel farther to get the items they need, and with larger companies typically dominating the market, the money will flow out of the community, harming the local economy. It seems that many folks are failing to remember the impact of real estate investors on the housing market. Florida in particular seems to be catching the eye of numerous homebuyers who believe this time is different from the infamous mid-2000s housing bubble. However, that's not the case. The state's economy is largely dependent on tourism, leading to a rise in demand from discretionary homebuyers. Numerous individuals are drawn to Florida to acquire their second and third homes. It's becoming increasingly clear that another wave of buyer contract cancellations is imminent. The reason behind this is closely tied to the recent surge in mortgage rates that are only getting increasingly out of control by the day. In fact, the 30-year fixed mortgage rate has skyrocketed and just hit an alarming 7.58%. This is a significant increase from previous rates, so much so that buyers are finding it harder than ever to afford homes of this nature. In many cases, these buyers simply do not qualify for the mortgage needed to purchase such properties, which creates a domino effect of cancellations. As a result of these higher mortgage rates and subsequent cancellations, many buyers are getting cold feet and walking away from deals they were previously invested in. Zillow received some concerning news: a significant increase in contracts being canceled on properties across the country in the past couple of months. After speaking with a real estate agent based in Jacksonville, Florida, Zillow learned this issue is quite severe. In fact, according to the agent, there have been more cancellations in the last 3 months than they've ever seen in their 25 years of practice. This is particularly alarming in a state like Florida, where the real estate market is usually quite stable. The current demand from homebuyers is hitting an unusual low, something we haven't witnessed in over 25 years. The National Association of Realtors shared that only 4.04 million existing homes have been sold this year, a historically dismal level that brings back memories of the 2008 housing crash. Adding to the challenging market conditions, mortgage applications for purchasing a home have plummeted over the past year. Compared to the peak of the pandemic in 2021, such applications have seen a 50% decrease and are down by 27% from the same period last year. It's been ages since we've seen such numbers, indeed 2 to 3 decades at least. Sellers in the real estate market have long enjoyed a comfortable position, that is, until the recent downturn. Many of these once successful sellers are realizing that the market has shifted, leaving them with fewer opportunities for profit. Sellers across the board have begun taking measures to remain competitive to accommodate this shift. Many are choosing to lower their asking prices, with some even going so far as to reduce them by almost 18%. Others opt to rent out their properties while simultaneously trying to sell them, further complicating the situation. Of course, the implications of these measures are far-reaching, extending not only to sellers but to renters as well. As rental properties flood the market, rental prices are dropping to attract tenants. As a result, renters are finding it easier than ever to find affordable homes that meet their needs. The market inventory has increased by 20%, indicating something significant is happening in Florida. One of the areas where the rental market is taking a hit is North Port Sarasota. This area is just north of Cape Coral and is a perfect location to examine how the downturn impacts rental prices in Florida. Recent reports have shown that the asking rents for apartments in the area have experienced a sharp decline over the past year and a half. During the pandemic, there was a rise in rental prices, and they reached their peak in November 2023, with asking rents exceeding $3,000 each month and have since dropped. Jerome Powell, the chairman of the Federal Reserve in the United States, has recently announced that interest rates are expected to remain elevated for a longer period. This has shaken the real estate market across the country, leading to an increase in new listings and inventory. Homeowners waiting for the right moment to sell now realize it may be the best time. This shift in mindset has led to an increase in homes for sale, causing a bit of panic among some sellers. Price cuts have become more frequent across various markets. In cities like Jacksonville, we see larger price reductions due to the demand. Some areas in Florida are experiencing slightly smaller price cuts, while others fall somewhere in between. If you're a potential home buyer or investor, you can expect to see more and more of these price cuts from sellers. Thanks for watching, and please make sure you subscribe if you enjoyed the video and leave a comment below.